Welcome to the inaugural episode of Luis Tamborrel, Investing Unfiltered, the podcast through the noise with over 35 years of boots on the ground experience in stocks and real estate. I am Luis Tamborrel, your no BS guide from the heart of Texas, sharing my analysis, insights, hard-won lessons to help you build wealth that lasts. Today, we are diving in why now is the moment to diversify, like never before. We'll break it down into three powerhouse segments. First, the rock-solid stability of commercial real estate in Texas metros. Second, the rocket-fueled AI stocks shaking up the market. And third, the wild from spotlighting Ethereum. Well, buckle up. These aren't just tips. They are wake-up calls. And remember, this is my take based on decades of data and deals. I'm not your financial advisor. So do your homework and let's roll. All right, let's start with the foundation. Commercial real estate, or CRE. In my 35 years of flipping and brokering properties in Texas, one truth stands out. Real estate isn't sexy, but is it the ballast that keeps your portfolio from capsizing in stormy markets? Today, with interest rates dipping towards the 3 to 3.5 by 2026 or 2027, Texas is a goldmine, especially in Houston, Dallas, and Austin. I crunched the numbers from the Texas A&M and Cushman and Wakefield. Here's the synthesis for potential investors. First, industrial. Think warehouse and logistics. Austin leads with 9.1 ROI yields, thanks to tech nearshoring. Vacancies at tight 5.9 rents, up to 4.2 year over year. Dallas is close at 8.7%. Fueled by data centers, while Houston offers value at 8.5, but watch for overbuilds in non-port areas. Suburban high-income zones, they are outperforming urban areas by 1 or 2%. Fort Bend County near Houston saw 39% land appreciation last year alone. Retail is rebounding too. Grocery anchor strips in Dallas yield 6.5 to 7.5 with vacancies under 5%. Austin, experiential spots like fitness hubs in Westlake are hitting 7 and 8 total returns. Houston is steady at 6.5 to 7.5 with 100,000 plus family incomes. Crush it. Lower turnover, high rents. Land, pure appreciation play. Austin suburbs like Hays County are up 15 to 20% annually. Dallas Collins County at 10 to 15%. Houston energy corridors match that. Case in point, the Woodlands North Houston, the old stomping grounds, turn raw acres into 10 billion master planning empire, delivering 12 to 15% ROIs on industrial flips. Or the city center in Houston affluent Memorial Villages, bought post-2008 crash, now a mixed-use beast with 100% leasing and land value tripling. Suburbs win big over city centers for high-income families, 2 to 5% better appreciation per the Texas A&M study, thanks to schools, space, and safety. For 2026, moderate buy on industrial in Austin and Dallas suburbs. High buy on land in growth corridors. All cities included. Houston Energy Corridor is a sleeper hit for logistics at 7.5 to 8.5 ROI. This is your stability play. Folks, 50 to 7% of your portfolio here for that steady 7.9% grind. But don't stop. Stick around for segment 2, where I unpack why Tesla, Nvidia, and AI titans could 10x your growth. And segment 3, Ethereum, about to redefine finance. If you are hooked, smash the subscribe button on Spotify, Apple, or YouTube. New episodes drops weekly. What's your CRE play? Direct message me at Luis Tamborrel. Don't go. Coming up, my stocks aren't hype. They are history in the making. Tesla autonomy edge, Nvidia chip dominance could turn your 20 to 35% stock allocation into fireworks. With the AI market exploding to 379 billion by the end of per forecast. I eyed these 5 stocks: Tesla, Palantir, Google, Meta, and Nvidia. My analysis? They are not just survivors, they are dominators. Year-to-date 2025 returns as of October: Nvidia up 43% on Blackwell demand, Meta plus 25.5% from AI wizardry, Alphabet plus 26% riding Gemini waves. Palantir surged 135% on government contracts. Tesla's rebounding post Q1 dip with 5.51 Q3 and autonomy bets pushing towards 20% upside. Nvidia, my dark horse, 53% ROA. Revenue doubled 130 billion fiscal 2025. Palantir 50% ROI 1 billion. Quarterly revenue beat. Meta's efficiency AI slash cost 20%. Alphabet Cloud AI is undervalued at 34% ROE. Tesla risky but revolutionary robotaxis could eclipse EVs. You could allocate 20 to 35% here for 20 to 50% potential ROI, but volatility is real. Crypto's next. Ethereum Layer 2 magic versus its coin. Subscribe now to catch it all at Luis Tamborrel on all platforms. Your move? Forget memes. Ethereum, the platform rewriting finance. ETH coin or ETH coin hovering at 336 today, up 11.9% projected by October end. Whales scooping 8 million in 24 hours. Predictions? 4,500 by November, 5,000 plus in 2025 on ETFs, inflows and upgrades like Denkun slashing fees 90%. Ethereum, the platform, is the undisputed layer 1 king for DeFi, NTFs, and smart contracts, powering over 120 million ETH tokens in circulation and locking in a staggering 97 billion in total value locked, which measures the assets actively staked and used across its protocols for lending, trading, and more. That is a 50% rebound since July, showing real-world adoption exploding, in contrast to Bitcoin, which shines as a digital store of value, like a modern-day gold reserve for preserving wealth amid inflation. Ethereum delivers programmable money. This means you can build complex, automated financial apps on it, from yield farming to decentralizing exchanges, turning passive holdings into dynamic income-generating ecosystems. Invest in the coin for the volatility plays, 5 to 15% portfolio, high tolerance, or treasury, staking yields 4 to 6% safer. My thought, 70-30, the coin and treasury for balance. Platforms upgrades signal 40% gains ahead. This trio, CRE for roots, stocks for rockets, crypto for revolution, demands diversification now. My 35 years lens screams 50 to 70% RE, 20 to 35% stocks, 5 to 15% crypto. Tailor to your risk. But hey, this is Luis analysis, not advice. Consult your professional. Well, that's episode 1, your diversification blueprint. Love it? Subscribe. Rate it 5 stars. Follow me at Luis Tamborrel on Instagram, TikTok, and X, YouTube. Our next episode will be on crypto. Please share your thoughts, comment below. Wealth awaits. Go and build it. Thank you.